Good afternoon, everybody. This is Dennis Woburn with the Active Trend Traders. Welcome to the Aftermarket Monday webinar, where we basically, I want to remind everybody that all materials that we do present are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. What we try to achieve in Aftermarket Monday, one, is provide timely, actionable intel at the beginning of each week to coincide, and then we basically then not duplicate, but we'll then cover what we covered on Monday, but we'll follow up with it on Friday to see, okay, here's what we're looking at, here's what happened. So the two webinars or recordings go together. So we'll do a real quick market review, stocks and ETFs sitting up, and anything else if we have time, where to focus. Remember, have patience, stand back and respect the rhythm of the market. Here's some of the things that we're looking at right now. We know that in July, the seasonality of gold usually kicks in, so I'm looking for, to size into a position on Nugget. We got a kick on oil as of over the weekend, so we bumped into a position on UCO. FAS, the financials, maybe finding some support and get ready to bounce. And then some of the ones we were looking at over the weekend, LCRX, CGNX, Momo, and then Tesla, NVDA. I'm waiting for some setups on Tesla and NVDA for the active trend trading strategy 1 and strategy 2. And so let's get in here. And before we get to the market indexes and the market review, here's what I've been talking about, guys. I keep telling everybody I'm waiting for the seasonality in gold. And here is a chart that basically goes back over 40 years, from 1976. Oh my gosh, that's been 40 years ago. I guess it has been. 1976 to 2015. As you can see, the upper black lines is the 40-year pattern, and it says here's what gold has done. And I know gold miners is not an exact match, but it does follow the rhythm of gold. And look, and after it comes down from the beginning of the year, there's a tendency for gold to do what what I'll be calling some bottoming. That this is what I'm looking to to take place. Is it going to do some bottoming here in the June, July time frame, especially in the July time frame, and then go on to a rally. And typically in the past, over the past 40 years, that rally is typically a an exceptional rally in gold. Last year in the gold miners, it was a rally from July to the end of, actually it didn't last that long. It only lasted through the month of August, a little bit sprinkling into September, but it was in excess of like 77% on the 3-time leveraged ETF. So we're waiting for this, basically to put in a base and then come out of the base, and we'll take a look real quick at gold to see, is gold doing that? But before we do that, let's take a real quick look at what are the indexes telling us going into Monday. Well, the first day of the week, S&P gives us kind of a weak signal moving up. Although we have the TSI turning up, it's turning up above the 0 line, which is basically a level of support, along with momentum turning up a little bit, along with the shorter term momentum lines on the market forecast turning up also. The pattern on the, this is actually a negative pattern for S&P in that it gapped up a little bit, ran up above this breakout line at the 24.46 level, but then closed all the way almost down, dead at the bottom of the price range. So from that aspect, that makes it a kind of a negative for the day. Not much to write home about on the weekly chart other than the highlight. Yeah, we're still showing the negative divergence on the momentum oscillators. NDX, NDX a little bit more, well, not a little bit more interesting, similar type pattern, except it had a little bit more of a slight uptrend to reverse, and sure enough, we get almost a bearish engulfing on a daily chart, but it held the 8 to 20 combo. And when I'm talking about combo, I'm talking about the moving averages. It held the up 8 and 20. The uptrend is still intact. Let's roll this over here. And as long as that trend line stays intact, the price on the NASDAQ should continue to bounce up. Now there's several other uptrend lines that can also be drawn in on this that provide, and some people utilize what's called some fanned indicators. Well, there's Fibonacci fans where you can draw in several trend lines, and if the first level of support with the trend line doesn't catch or stop the downward momentum, then people anticipate the next one. And oftentimes you'll find it coincides with one of the moving average lines, and I like trading either off of horizontal support or moving average lines. They tend to provide the better of the two types of bounces, and oftentimes, like I say, coincide with bounces that are off a trend line itself. So let's get rid of that one, move that drawing. And so that's what's going on with the NASDAQ. Let's see what's going on with the Russell RUT. Russell, as you can see, Russell came bouncing off of the lower channel line, which is in a slightly upward sloping channel, which oftentimes can be a negative sign. But this market, as we've seen over the past several years, not getting much in the way of corrections. Pullbacks are really quick and shallow, and so that may be what we're getting on the Russell is a continuation of a bounce. Where does the Russell become interesting for me personally is when it's closer up here to the upper side of the channel, or down here towards the bottom side of the channel is when it becomes more interesting. Should we take trades here in the middle? I would say that we would want to roll over to the intraday hourly chart to see if we're getting setups there. But keep in mind the longer term charts, because these represent stronger levels of support and resistance. Let's take a look at we had mentioned. Let's take a real quick look at okay. Let's take a look at Momo. Okay, Momo the other day broke out of this little, pattern that it's putting in. It pulled all the way down to the bottom of the Keltner, and well, close to the bottom of the Keltner, close to the bottom of the moving average envelope, which is about 10% from the 20-day, and now it's making a recovery. Not a lot of strong volume here, but we did get a trigger. It may continue to bounce up. If you are looking to get in a trade on Momo, which has been one of the top performers in the IBD 50, look for the bounces off the 820 combo. The two stocks that we highlighted over the weekend are LRCX. I actually got in and put in more of a negative signal today. It did not reverse an uptrend, so it's not really a bearish engulfing, although it has the shape of a bearish engulfing because it engulfed Friday's and almost all of last week's patterns. A little bit of increased volume. And so part of the question I had going in is looking at this chart, am I going to get a bounce off the 50, which that could be a potential, or is just this basically a horizontal flag, and here's the flagpole. If this breaks, it's probably going to fall down here to about the 130 level, which is about where support is. Let's do a quick check on that to see where it might fall. So here's the flag down to about this level. Let's remove that. we can either duplicate that and slide it down where if it bounces, and there you go. If it breaks down below the 50 level, where is it likely to go? Well, right back down into this level of past support. Interesting how that works. And so we'll be at FAS shortly, Dorothy. So there's LRCX. Again, this is a newer issue, and so worth keeping an eye on, because it's certainly, it's not in, it's clearly in an uptrend, and it's continuing in an uptrend. Let me get rid of my drawings here. Real quickie on CGNX. CGNX. Just maintain a nice little pattern. Looks a little bit more healthy than the LRCX, but it's just bouncing here about the 90 level. And one of the things on stocks that are flirting with the $100 level, oftentimes if they can get them up above the 100, then it increases the probability dramatically that's going to go at least up to 120 and just move into a higher level or higher pattern. You can take and just draw a trend line across the tops there. And we've got a trend line that we can draw across the bottoms here. And so we put in a nice little wedge, breaks out the top. It's probably going to run at least back up to 97, if not higher. It appears, like I said, that the momentum indicators and oscillators are trying to move back up. Haven't quite got a swing on it. But CGNX, wait for the TSI tick up. Okay, let's see here. Yes, I will, Andrew. We're moving right. Matter of fact, I'm moving into that right now. First, I want to go in Nugget. Okay, Nugget. We had a weekly move on Nugget from last week. A good signal here. It's holding above the 8-day moving average. As long as that 8-day moving average remains intact. I really don't have a great buy signal here yet because it hasn't really sprung. And so what it may do, excuse me a second, it might actually, when it does spring with the seasonal, it may just have to break out the top of this triangle that we see over here on a weekly chart and on the daily chart. But I'll look for it. If I can get a little bit closer, like down to the 30 level, that might be an entry area, or I can look at it on a intraday chart for that potential move. Let's take a real quick look on the intraday chart on Nugget. Okay. If I get a track back down to the 50 period moving average on the intraday, that equates to the 8-day. And we get a bounce off of that, and I get the TSI, either down here in the lower reversal zone, or I get a look where it looks like it's going to make a move up. But right now, $32 is the point of interest. $32 even is the point of interest on the Nugget, on Nugget. And as you can see, as I said, the yellow 50 period moving average on the 1-hour chart equates to approximately the 8-day moving average on a daily chart, which you can see right now is sitting at 31.95. Moving right on, FAS. FAS, we get a nice, let's see, Dorothy, your question on FAS. Okay, if TSI of FAS has a tick up during the day, is a trade taken during the close of the day? So did we have a tick up? That's a great question. I'm looking at an hourly chart. The answer to your question is yes. If you can see that and see the tick up going into the end of the day, that can be an early entry, and to do that, fine. We saw that with gold, with Nugget the other day. As we can see here, FAS on, and I'm watching this number right here. Let me put a circle around it so there'll be no confusion. I'm watching this number right there, and also a little bit of this number right here, but primarily the one on the left. Let's go back. Okay, so on Friday last week, we were at 6.79. And as you can see, we are now at 4.98. So TSI actually went down for today. So if it does get a tick up, and this is where I'd be looking at, where's it going to go? I mean, 47 looks good, or even back down here at 46.45. That's where we got the bounce. That's where we're expecting a bounce. And so, but today's candle, not really that much commitment there. Got a lot of stuff to cover today, and not a lot of time. Let's see here. And now, as you said, Dorothy, you've got a little bit of cross currents here. TSI on FAS on the weekly chart, kind of turning over, but not totally turning over. It's just kind of like going sideways right now. Okay. Bear with me, folks. UCO, we get a nice move off of UCO. If this pattern fulfills, and UCO for me, I would be looking, to basically, as I put out this weekend, if you're a premium members, I said, I would buy it up to $13.10, and you had that opportunity to do that today if you wanted to. We got in on this on Friday, based on this signal right there. Tick up on the TSI, and a green candle above a red dot at a support, pretty strong support level. And now we just need for it to fulfill and push back up with symmetry of these past moves. And so that would put us back, and I'll target to get out of this somewhere between $14.50 up to about $16, and that'll give us a nice little return of in excess of 10%, probably pushing about 17-18%, and then wait for it to repose. But because right now it is in a downtrending channel, but it still looks pretty good. Let's see, Tesla. Now, if you're not a premium member and you're just joining to see what we're looking at, that's great. We're glad you're here. The premium members, of course, get the trigger alerts on when we're doing the trades. And as looking here, the majority of people here are in that category. Tesla, okay, kind of a negative day on Tesla. A bearish engulfing, closing close or right back down on a trend line. We'll see where we've got strong support down here at the 366 level, and so we'll see how that works out. Do we want to, do anything at this time? We put in an order last week to, that if the 375 put got over $4.50 or $4.50 to go ahead and fill us, because we're estimating at the it hitting the 8-day moving average. That actually, and we took a small position that actually filled this morning. I haven't put out the notice on it, but we did fill it, and that was just a demonstration trade. So don't expect, you shouldn't have expected an alert on that, other than if you would have been watching the final hour on Friday, you would have picked up on that potential trade. And that's one thing, when you're there live, you'll get to see a lot more of the trades that we, not a lot more, but some of the trades that are just, real quick. We put them on as demonstration trades. I'll track them on my account, but everybody's given the option to be able to do that. So let's take a look at NVDA. Okay, NVDA. What is it? What can we learn from NVDA today? Well, one, it found support at the 20-day moving average on a daily chart. That's positive. By the the size of the wick, the lower wick, pull this up a little, by the size of the lower wick, it was clear that buyers did come in to support it at the 20-day moving average. Now, will buyers continue to come in and support it and push it back above the 8 and back up to the top of the Keltner channel and the moving average envelope? We're going to see. As long as we don't get a close below that 8, we're okay. And on this one, I did get stopped out of my strategy 3 position on this, but I'm holding as I said on Friday, I'm going to hold the just the real small spread on it, which was this 155 by 160 put spread that expires on this coming Friday. I'm going to hold that and just look to see either close it out on Friday for a profit, or if it kind of hangs up and gets up, let's say, to 157.50 and just kind of stalls out, I'll go ahead and just shut it down there for either break even or a slight profit. So I hope that answers your question. Your question, Andrew, was, will you have time to discuss strategy to trade? Well, I think I just did that. And so, and that's what I'm looking at. And again, that's the reason I did that spread trade, was because the level of risk is defined. And that particular one, we got it almost for a 1-to-1 risk ratio, and then it's just kind of like stand back and let it work its way out, as long as the 20-day moving average stands up, because its range today was from 156 all the way down to 148. And so if we push back up tomorrow and explodes higher, that's great. If it explodes lower, my risk is capped. IBB, again, not for me personally, Gary, I'm not getting the pullback that I'm looking for yet. I would like to see it, pull right back into one of the moving averages. And why didn't that take? LABU is what? BU. There we go. Again, got a really great, push higher. And since we're looking for pullbacks, we're looking for that pullback into the moving average. I like this on a daily. This is a pretty impressive move. Let me go back to IBB. This is a very impressive move that we need to pay attention to, but we don't have to buy where it's at right now. What it needs to do is just do some digesting. This was a significant gain here. Do some digesting, as you can see, because it's pushed right up, back up into a level of resistance right there. Well, my level of support, if you will, is back down here at the 303 level, where you could also define some other levels of support, such as, about the 314. But right now, it looks like it is getting ready to pull back. And I'd like to see a pullback either for the 8 and the 20 to catch up with the price action, or for it to pull back into the moving average. If the biotechs remain strong, we're not going to see much of a pullback. It'll be more like the moving average is catching up with it. This is one of those where you can also pop over, and I realize how we doing. Okay, I've gone way over my time frame, but there's a lot of stuff to be shown today. Guys, I hope you don't mind that. And so the other way to look at this also is IBB is, pay attention to this 50-period moving average on a 1-hour chart, and when the price action gets to it, or it gets to the price action, that can start indicating when we should start going. So, David, 320 on the NVDA credit spread. We'll see how that works. So that gives you actually a better risk reward than 1-to-1, which is good. because your max loss on that one would be $1.80, I think. So, okay, my friends, I am going to call it a day. That should give you plenty of things to think about. Please let people know that we're back online doing the aftermarket Mondays, and the recording will be up within probably about an hour. So have a great week. Looking forward to finishing off June strong. Let's just be patient, wait for those sit-ups to happen. God bless everybody.